Good morning, traders. This is Miami Trade Floor with Good Morning Forex. I want to thank you all for attending today's trade room online. This is December 8th, Wednesday. It was a nice day in the markets today. We were able to take points on a lot of different pairs, but today we're going to be discussing a euro-dollar scalp that we took off one of our moving averages. It was a pretty nice little quick scalp for 5 to 10 points, just very quick trade. Now, before we get into that, I want to let you all know that we do have our online trade room available at goodmorningforex.com/YouTube for a 5-day free access. If you would also like to see the full-size photo of this trade, just come to the technical analysis section of our website and you'll be able to get more info on that. Now, if you would like to call one of us for a quick just run through or some questions that you may have, just give us a call at our US phone number, which is 786-286-8089. All right, traders, now let's get into this trade. Let me pull it up actually. Alright, traders, give me 1 second. We'll have it up and running. Alright, traders, there we go. Alright, we did take this trade off of our 5-minute formula. This right here was specifically on a demo account, but it shows how we use one of our simple moving averages, which just really helps us give general direction for the market. It's our L7 line, which is the purple simple moving average here. Now we see that it was coming down. This is on a 5-minute chart as well, traders. Now when we got the first major test this morning, we saw that we bounced off of it, came down to some lows of 13200 big figure, and then it went after it again. Once we saw it come up to this level and test the Bollinger at the 50 level, I decided to get in. I got slipped a little bit lower, and we moved down. In our live platforms, this is where we took profits, but I left this open just for example for us here on the online trade room. We saw that we came to higher levels, testing outside the Bollinger, coming to the top of the channel indicator, and then we came back down under the L7. And this is a long-term moving average, traders, that we see as very, very important. Now, on this demo account, we were able to take 19 points off of this. But initially, once we took our profits over here, we was to put the rest of the position at break even, and then look for re-entry over here to have taken maybe 30 to 40 points on that trade. But you know what? We're not greedy traders, so we're more than happy, and we're good to go with that. Now, if we do some more analysis on this trade, traders, we could see that over here, when we came to this bottom low, our stochastic RSI, also our MACDs, were confirming to take it back up, especially when we see this major crossover area right around here. We take it up for maybe another 25 points. Then you really got to fight that L7 till we come up to the higher level and then rip it right back down. Now, one of the important things for us as traders to understand is what's going on in the open market operations. That, remember, we have the Federal Reserve doing open market operations on basically certain days throughout the week, and this is for the quantitative easing bond purchasing program that they're doing, which is monetizing debt. Eventually, it's devaluing the dollar, but in the currency market, since we are paper currency versus paper currency, none of them are backed by anything. It creates just tremendous volatility. So I've been really just trading this the London session, making some pretty easy points, such as this trade right here, where we see that we got to the bottom of the channel indicator. We also popped up, and we see that our oscillator started crossing back up around this level. Also, MACD gave us a confirmation at this level, and we could have taken that up for some nice points. Gotten up back here to this level, as we see on our oscillator, touch the L7, and come back on down for some more points. Now, those are basically 50-point moves back and forth, and we would have been done by 8:30 this morning, traders. So there's nothing wrong with being done and taking your points and being out of the market. Now that's what we try to do on a daily basis, traders. Consistently, just make our points, be done, grow our accounts, and we're out of here. Now, as a just a warning, traders, what I see a lot in the online trade room is traders that are using too much leverage, somewhere between 10 and 30 to 1, which is way too much. Even though the brokers will allow you somewhere between 50 to 400 to 1, I use 3 to 1 because that's just the way I grow my consistent account. You know, if I have, let's say, a $10,000 account, I do my 30 pips at 3 to 1 leverage, I'm growing my account $100 a day. You know, that's 1%. I'm more than happy. More than that, we're just being greedy, and the market's going to take it back from us because it knows that we're being greedy. So traders, we have to basically realize that for ourselves and conduct ourselves accordingly. And that's part of the program here at GoodMorningForex.com, where we discuss the 4 corners of trading, which are money management, then fundamental analysis, technical analysis, and lastly and most importantly is trading psychology, which includes controlling your 2 emotions of greed and fear, which are the 2 strongest emotions as traders. So with that, traders, I'll leave you, and confident trades. We'll see you in the trade room tomorrow.